Good morning. Can you hear me well and see me well? Good morning. Can you hear me well?
Hi, Chiara. I can hear you well. I think the people can hear you as well. I was thinking maybe we wait a minute or two because it's not yet the time.
Yes.
Good morning, everyone.
I will need to switch to my mobile at the end of my presentation, as you know. So I hope that will be okay. So you will let me in from the telephone. Okay. And you are running my slides, right?
Yes.
Okay. Good.
Have we recently certified people?
Okay, so we're at the time. Maybe we can start with a short introduction. So thank you everyone for joining this webinar. I'm Laetitia, I'm the CEO of Greenly, and I'm here with Chiara Del Prete to discuss the CSRD compliance in a practical way. Here we want to talk about what's the role of EFRAG, what they've done with the CSRD to define it. So we are going to talk double materiality, ESRS, but also how in practice you can put this in place in your company or in your partner's company. Chiara, maybe you want to say words to introduce yourself.
Yes, good morning to all of you. I am the chair of the Sustainability Reporting Technical Expert Group, and I lead the technical activities of the EFRAG Secretariat in general.
Thank you so much, Chiara. So first of all, we're going to look at the EFRAG's role in this European sustainability reporting. So maybe you can tell us more about how it came together. What is the importance of the standardized corporate reporting on sustainability, and an overview of the CSRD?
Sure. I think we have a few slides to support this introduction. So a word of introduction on EFRAG. It was established in 2001 to serve the European public interest with the mission to the current mission is to continue the work on endorsement of IFRS accounting standards, where EFRAG has been serving since 2001. And starting from 2018, we are working also on sustainability. And in particular, we have been mandated from the Commission as advisor to elaborate the European sustainability reporting standards, which are mandatory for companies under the scope of the CSRD. We have a multi-stakeholder composition, a very transparent and robust due process. And we see up to now that Europe is leading on this domain. Next slide, please. So why Europe has decided to standardize sustainability reporting? Because the current regulation, the previous regulation, the non-financial reporting directive, is not working well and is not able to deliver information of good quality, comparable, and therefore to support the the flows of investments that are needed to realize the Green Deal. And the ultimate objective, and very ambitious here, is to bring sustainability on equal footing with financial reporting when it comes to an overall corporate reporting. Which means covering all the aspects of environmental, social, and governance disclosure with a discipline that avoid ESG greenwashing to create a reliable data platform. Next slide. So how we are proceeding with this objective? First of all, there is one regulation which is the level 1, the CSRD, and then the level 2 European Sustainability Reporting Standards are first drafted by EFRAG following a multi-stakeholder transparency due process, and then are issued by the European Commission as delegated act applicable in all the European countries after the transposition of level 1. The overall architecture includes sector agnostic standard, but also sector specific standards. As per the CSRD, the sector information needs to also be covered in the standards that we issue. There is a first time adoption for a first group of companies, the larger companies, in 2024 already. So sustainability statements to be issued at the beginning of 25, and then in next year, the other group will follow. Next slide. You are on mute.
Sorry. So thank you very much for this introduction. So tell us a bit more, like, what does the EU taxonomy has to do with all of this, with this new sustainability reporting? How does this all match together?
Well, the European taxonomy is a tool in order to identify the different types of investments that exist. And in order to do so, it requires investors to have a number of, to perform a number of assessments in their investees. So the role of ESRS in the overall EU taxonomy is to build the data infrastructure that is needed for investors in order to comply with their taxonomy regulation. So that's a first element of interaction with the taxonomy. The second element is, and there I would say the so-called SFDR PAI indicators play a pivotal role, and they are the backbone of ESRS information. Now we know that there are several limits in the PAI, and possibly the Commission is going to work in the future to enhance them and improve them. When this will happen, anyway, in the CSRD, there is a mechanism of review of ESRS every 3 years. This is perfectly normal and foreseen in every regulation of this type. So if and when there will be new PAI or revised PAI, we are going to review ESRS in that sense. And then there is the Article 8 of the taxonomy, where companies are required to disclose details of alignment of their activities, OPEX and CAPEX. And in ESRS, we have a placeholder. So we don't double regulate this area, but we simply offer a place where this disclosure has to be provided so that the reader can see all the sustainability related information in one place.
Fantastic. And so as the EFRAG, what are you doing specifically to support company, for example, in preventing greenwashing, but also in helping them achieve the compliance?
You maybe can project the slides on implementation right now to cover these aspects. I think I had.
I'll go back on this later. Which ones?
Well, we have. I thought we had a series of slides on the Q&A and implementation support. Yes, one? Precisely. Yes. So in general, the question of greenwashing stays in the standardization. So the fact that we have provided a very clear series of definitions and very strict regime for reporting them provides the basis for this to happen. So you cannot disclose in a biased way. It needs to be true and fair representation of what you're doing. You cannot only focus on positive impacts, for example, and neglecting negative impacts. There is a very rigorous way. So the entire architecture and content is built to avoid the greenwashing. Now, what are we doing to implement them? First of all, we opened in October 23, so now it's 1 year from now, a platform of Q&A where every practitioner from all the different categories can include their implementation questions. We have received 730 questions so far. How do we deal with these questions? We have the same decision making as per the standards, so it's the SRB deciding, supported by the tag. All is discussed in public meetings. We have a public log of these questions, so everyone can see which questions have been asked and which have been already answered and how. So before submitting a new question, always please go and look at the website with the log of questions to see if your question has been already addressed, as we see very many duplications in questions. So the answer can take the form either of an explanation or of an implementation guidance. The explanation doesn't require any public comment because it's simply an illustration of where in the standard this can be found. So it doesn't go beyond. The implementation guidance, on the contrary, adds illustrations, examples, flow charts, etc. So it adds educational and implementation material to the content of the standard, but it doesn't go over and above the requirements in the standard itself. To do that, we would need a full due process for modification of the standard. So with another delegated act and an amendment, something that may happen in the future, but so far still hasn't happened. Every 2-3 months, we issue compilations of explanations, and now we are going to work on a compilation of explanation by the end of November. Then we will pause a bit. We will continue to work, but we are not going to issue new explanations until February or March. Next slide. We are also what we are doing to help. We issued the first 3 implementation guidances. One is on materiality, one on value chain, and one on data points, which are issued after a public feedback of 1 month, and they have been issued in May. They cover the most challenging aspects of our standards. Next slide.
I think it's the last one.
Okay. I thought we had the slides on materiality and value chain before.
Yes, we had them before. But I wanted to talk about the way EFRAG supports company
so
first.
We have the explanations, we have the implementation guidances. We issued a report on observed emerging market practices, where we interviewed the 28 biggest players, the more mature, in spring 2024, and we collected quite interesting lessons learned, which we made available to all the public. We are going to continue to do the same also next year with more guidance, more educational material to help companies in their journey and to address the questions that we have already received, because a good 20% of the 700 questions relate to implementation guidance or needs a implementation guidance to be solved.
Great. So EFRAG, you worked on building the CSRS, but you're also helping the company with this Q&A and with this implementation guides to really put it in place within their organizations. Maybe I'm going to go back a little bit in the flow that we had to present in a couple of words the Greenly CSRD platform, because what we are seeing in the market is that there's a huge demand for tools. This regulation is complex, but it doesn't have to be. The double materiality makes sure that the complexity of the analysis is adapted to the company. And so we often see people getting a bit desperate about this regulation. Well, it's a huge opportunity. And so I want to alleviate the arguments that this takes a lot of time. It takes a lot of time if you do it manually, because with an Excel and a single person running around after every data point, that's going to take time. It's going to be a manual process with duplicates. The data collection will be painful. The materiality assessment will be painful. So that's why at Greenly we decided to help our customers leveraging technology to reduce the time spent on CSRD. Basically, we've done that with carbon accounting before, so it's not the first time we're trying to do that. And here we're trying to help both consultants or companies themselves to comply with CSRD, but with the less hassle possible and in the seamless possible way. So we cover the full cycle, double materiality assessment. So we have the stakeholder surveys, and we're going to go back on this, but this is something that companies can actually do themselves. I've done it myself for Greenly. It's not a nightmare. It's a lot of questions, but if you have the right stakeholders involved, if you can centralize the information that you gather, it's something that is available for everyone to do in autonomy. The ESRS data collection is also something that I think really requires a tool because there are tons of data points, in total almost 1,200. And those data points come from everywhere in the company. So you need a platform where you can collect these data points in a single place, assign owners, and also be audited. There's a big role of auditors in CSRD, and they need to see all the data in one place, know why it has been chosen, how it's been calculated, etc. So a platform to centralize that is paramount. And then, of course, the reporting and compliance. So we export all of this data in the regulatory format. So in our CSRD solution, you will save time from the materiality assessment all the way to full compliance, as I mentioned. But more importantly, you will empower your team. What's important here is that the CSRD is an opportunity for everyone to be aware of their climate and sustainability risks and opportunities. So we want the companies to be able to leverage these risks and opportunities for also business purposes. So by empowering the team and not externalizing completely the process, we can really put our customers and the people who are complying to CSRD in a way to becoming sustainability leaders as a whole. I'm going to do a little zoom here on the double materiality. What we allow to do here with the double materiality is to reach better efficiency with the same quality as you would do if you were doing it manually or for hours. So we have one platform where you can retrieve data from your suppliers, your clients, your customers, and of course your internal stakeholder. So there's automatic follow-up, so you don't need to chase people around and try to find the information. And of course, there's an agile process for implementing change instead of working externally on a spreadsheet. But at the same time, you have the same data quality. We've built DMA questionnaires that with AFNOR and APAV, with AFNOR and APAV trained experts for the CSRD auditing. So it's the same question that consultants will ask, but we are guiding towards an answer. So we made it easier. And of course, this is interoperable. That's the great thing, I think, that will happen with CSRD, is that there will be a unified way of communicating and on reporting on your sustainability. And CSRD is probably not the only ESG questionnaire that you will ever have to answer. But if you answer to CSRD, you probably covered a huge part of other ESG reports that you have to do for your customers, for your investors, for any stakeholder. And so after filling out this double materiality, after filling out the CSRD on the Greenly platform, you'd be also able to export ESG results for other frameworks. Now going back to you, Chiara, we want to know more about the ESRS, and especially in regards to the IFRS standards. How did you harmonize everything? How did you make how did you choose the standards that basically are going to define sustainability tomorrow? So I'll let you tell us more about this.
Yeah, I don't know if we have slides on this, of this specific aspect. I can focus on materiality in a moment. So what we have done is not to reinvent the wheel, absolutely. We started from whatever is already used in the market. So for impact materiality, we started with GRI, complemented by SASB for the side of financial materiality. For example, half of the SASB is already embedded in our sector agnostic level, because the way their standards are built, they have not only sector elements, but also elements that are very recurring in many sectors, in each and every sector. So we did that. Then another important source were the international instruments of due diligence, so the UNGP, OECD guidance for those aspects. For social, we referred to the ILO conventions and in general to existing regulation on the various topics of the human rights and labor rights. And so on and so forth. So we took whatever exists already, and it's the obvious reference. Then in Europe, we have a lot of regulation that already build reporting, maybe not to the public, but to some registers. Take, for example, hazardous waste or substances of concern, etc. So what we did was really a consolidation exercise. And last but not least, we had the SFDR data points that are the backbone of our metrics, but also the benchmark regulation, the EU climate law, and the Pillar 3. So really what we did is to not add the data points, absolutely. The guilt of, if you want, ESRS is that we have made all what existed already visible. That's maybe the how I would characterize that.
Fantastic. And so, as you're saying, there were things that existed before, and there will be other frameworks that exist even during and after the CSRD. How did you think about that? How did you think about the harmonization between this ESG report and any other ESG report that companies would have to do?
Well, we first of all we allow incorporation by reference. So for an identified list of reports that exist already and cover items related to in a way or another sustainability reporting, this can be incorporated by reference in our report. Then we are working on a bilateral basis, one-to-one, with all the important other international standard setters in order to secure that European companies that apply our standards do not have to do much effort to comply also with the other regulation. We call these interoperability work.
And do you have example of companies that you've seen that had this struggle, and how did you came up to build this with them?
I haven't understood the question.
Do you have example of feedback from companies that had this question of interoperability and that you managed to support with that?
Well, we issued an implementation guidance on interoperability with the IFRS Foundation jointly with them. So we have done a massive work of 1 year and a half with them to map the disclosures that are in common between the two standards, so that the companies and the auditors don't have to wonder whether one data point is equivalent to another. We did that already for them. And we have done the same with GRI, and we are going to maintain the mappings that we have issued. We have issued the same with the TNFD. We are working with CDP to get alignment also with them. And so this is an integral part of our support work.
Fabulous. Thank you so much for telling us more about the ESRS. Now, maybe let's deep dive into the double materiality. We know that it's a topic that is super important in the CSRD, very innovative. So tell us more about what happened here, why it's innovative, and how you came up with this.
If you go, maybe we can use the slides just to support. So far, GRI was the dominating framework for reporting on impacts, so single materiality. And the TNFD was the dominating aspects for financial materiality related to climate. We were mandated by the CSRD directive to put the two things together and to report at the same time on the outside in and the inside out aspects of sustainability matters. So the way this is built, you see in this picture, you assess the materiality of a list of matters that we have in ESRS 1 paragraph AR16, and they can be material either from impact side or from financial side. So either because they have material impacts or because they have financial risks and opportunities that are material. Once they have been assessed to be material either from one side or from the other, then you are in the green area and you need to report because the matter is material. And once the matter is material, what you do is to look at the topical standards for that matter and to analyze if each and every element needs to be reported. So, for example, if a matter was material due to impact, materiality, you will report on impact. But if on the same matter you also have material risks and opportunity, you will also report on risks and opportunities. And in this case, disclose financial effects on material risks and opportunities. So that's how we built our decision-making for material information. Next slide, because I think I have more to say on materiality. No, okay.
That was the only slide, but you can say more.
No, well, we made this effort in the implementation guidance to provide indications on how to apply this concept, which is very well known in financial statements preparation. So those of you that have familiarity with the financial reporting know the pivotal role that materiality plays. We had in front of us the choice between mandating a list of always mandatory elements to be reported always, or to mandate a perhaps longer list of items where you need judgment to determine if they are applicable in your case or not. And we made a bet collectively on the maturity of the systems, auditors, preparers, in order to perform a materiality assessment. You need a certain level of understanding for sure of the sector where you are. Materiality is facilitated by an approach that is not a compliance approach, but only when you look at your sustainability impacts with the eyes of the management, when you have integrated the sustainability into your business, then that's where you already have a knowledge of where your impacts are. If you, on the contrary, try to approach materiality as a compliance exercise, that's where you are trapped into too many data points. There are 800 data points. No, there are no 800 data points. First of all, 1/3 of them is to be reported only if applicable, and all the rest only if it's material. But you need to know what is material for you, and that's the difficulty.
Cool. And so can you tell us more about the common challenges that companies face while really implementing this double materiality?
Well, the common challenge is, do I start from the impacts, risks, and opportunities, and then I move to the level of the matter, or the other way around? Another challenge is how much do I involve stakeholders, and how do I select these stakeholders, and how many? Another challenge is, do I need to use quantitative data, or can qualitative data be sufficient? A number of FAQs which you find already addressed in our guidance.
Okay. And so when the company responds to whether they believe this matter is material or not, what kind of proof do you ask? How do you check? How do we make sure that this is really material or not? And if the company, even themselves, is not sure, what's the flexibility here?
Well, that's unfortunately where we are still working, in the sense that by definition you need the sector agnostic and the sector specific layer. Once our sector standards will be available, the company will have a concrete help to say, let's see what are the most relevant matters in that sector, because that's what EFRAG is researching now. For each sector, in our sector standards, we are going to list the matters that are most relevant in the sector. So a company will be facilitated and will say, Well, I can say that I deviate from what is the average in the sector, and I have a good reason to do that. Now, missing that, what the companies are doing is to look at what other peers normally do to reply to this question.
Great. Yeah, because I've done the double materiality myself for my company. And it's true that sometimes there were questions I was a bit lost about, and I didn't really know if that was applicable to me or not, if I'm not a pro. And I assume a lot of companies who will do that for the first time, especially on the smaller end of the spectrum, are doing this for the first time and are wondering these questions for the first time. And what I figured is that indeed, industry benchmark helps. We probably have the same materiality as a similar company.
Absolutely.
In everything, and so industry benchmark, and also we have a chance to explain why we made a decision. So if we say this thing is not material, we can say I believe it's not material because of this and that, and
absolutely transparency in that respect. Yes.
Yeah. So it's all about being transparent. There's no like the objective is not to bother companies. It's really to have them be transparent and report and explain why they made decisions. A little bit like in finance reporting. You explain why you put the cost in this category or the other, and an auditor comes and confirms that you made the decision that you thought was right.
Absolutely. I'm going to close my camera because I need to start commuting now, but we can continue the conversation.
Yes. I think, anyway, we're done with slides. So maybe we can start taking on some questions. I've seen some of them appearing in the chat. I answered to a couple of them. There is a question, and maybe Chiara, if you're still around, you can help on. It's on IFRS S2. They ask commercial banks to disclose absolute gross scope 1 to 3 emissions on each industry and by asset class. Wondering if you could share more about how you approach this and how you help with ESRS implementation.
Well, this is an area where, of course, we're talking about sector standards, and we are going to issue our proposed sector standards in the coming months. In the meanwhile, the general rule for sectors in the transition period is that you need to look at IFRS and other guidance. So we would expect companies to look at the IFRS information, and when material, report that in their reporting, pending the issuance of our sector standards. And we are also going to consult, of course, on those.
Thank you, Kira. Another question from Ramesh on a practical question for their company. Waste is only material upstream and downstream and not in their own operations. How do we disclose this? And I can start answering by saying that you can either ask your customers and suppliers to help you with this reporting, but you can also just respond that material upstream and downstream. Maybe Chiara, you have a bit more to say?
Yes, so you need to consider that the sector agnostic dimension needs to be complemented with the sector specific. So waste, it's true that for the time being in the sector agnostic is not focused on the value chain. But that's where paragraph 11 of ESRS plays a role, because there is a requirement in its shall to complement with the sector-specific information on an entity-specific basis. So you are supposed to add whatever information about your value chain under the entity-specific from one side. From the other side, if an operation for waste is not material, there is the possibility to omit a data point for a material matter when this is not material under metrics. So and this is also covered in some of our most recent Q&As.
Great. There's a question from Esther about the impact assessment. How is the impact assessment given by a company and the one given by stakeholder are weighted? Is there a weighting recommendation, like 50-50?
There is no rule that fits all here. What is important is to disclose about the impacts on people and environment. So I would say when there is a conflict between the views of the company and views of the stakeholders that were involved, the company needs to ask some questions about the quality of the work that is done in order to investigate why there are diverging views between the two. Have we just disseminated surveys without first understanding who are the real impacted stakeholders or not? So I would say there should be no divergent views between internal assessment and external assessment.
Thank you, Chiara. There's one on the oil and gas sector specific standards. Do you know when it will be published?
Well, that's a good question. We are working to prepare the consultation package, but for the time being, we are focusing on the delivery of SMEs. We have a deadline, which is the end of 2025 with the sector standard, which means by January we should launch the consultation if we want to avoid to have a very challenging timeline. But nevertheless, we are also waiting for indications from the new Commission on when we can launch this consultation.
Thank you. There's a question on the US political situation and how do you think that will impact European regulations?
Well, it's not for me to speculate. What I can say is that sustainability is a macro trend that is there to stay, well beyond the 5 years of up and down. The Green Deal is there. Nobody has intention to stop working for the ambitions of the Green Deal. There are also other compelling political priorities, yes, so maybe we need to refine the approach, but I would say that this is a macro trend that is going to continue.
And I can only agree, maybe for once, it's not going to be the US impacting Europe, but Europe impacting US. I see a lot of similarities with the GDPR regulations that ended up really affecting all US companies. And I think it will be the same for CSRD. And I see a lot of American companies coming to us for CSRD reporting because they're working with European companies. So maybe the fact that Europe is so advanced into these regulations will force the US to comply, just to stay in the race. Question from Paola. If a topic is material, is the disclosure for all data points of the mentioned topic mandatory?
Well,
oh, we lost Chiara. Let's see if she comes back. There's a question on Greenly I can take in the meantime. Does Greenly solutions cover also disclosure on environmental, social, and governance risk, ESG risk? So yes, indeed, we cover the ESG risk. We started with the CSRD, but we're actually covering all of the ESG space because the CSRD is very wide. And basically, we're able to produce the data on ESRS1 because we have a carbon management platform. So we allow you to produce your data on scope 1, 2, 3 if you don't have it already. And for the rest of the data point, we help you collect them from your stakeholders. Chiara, you're back.
Yes, sorry for the interruption. So the question was, do I need to disclose all the data points? So yeah. There is a different regime which applies for policies, actions, and targets, as opposed to metrics. For policies, actions, and targets, you need at least to say whether you have or you don't have a policy, action, or target for a material matter. So that's mandatory and cannot be omitted. Then if you have a policy, action, or target, you shall report about it, using the data points in the standard and in ESRS 2 about minimum disclosure requirements. On the contrary, if it's a metric, for the metric, you can omit metrics that are considered not material. And in terms of level of granularity, you need to apply the judgment around the materiality of information in ESRS 1. So you don't necessarily need to report endless pages about your policies, actions, and targets.
Thank you. And so there's another one on materialities. When we say that the matter is not material, what type of explanation will be expected from the regulator? Is it just a small description of, I think this is not applicable to me because X, Y, Z, or is it the qualitative, quantitative? What supporting documents do the regulator expect?
So, yes, so at sector agnostic level, you only have to provide an explanation about climate, explaining how it is possible that you concluded that climate is not material. But for all the other matters, there is no explanation that a matter was not material. However, the company has the possibility, as part of the explanation of the business model, the value chain, the clients in SBM 1, to cover whatever illustration they want to say, to use to explain why something is not material. But it's not mandatory, it's voluntary to say that why a matter is not material. It's only for climate that it is mandatory.
Good. What if a European country did not adopt CSRD in their local legislation? Is it fair to say that the local companies in this country should not report to CSRD?
Just a moment. Can you please repeat the question?
Yes. What about if a country doesn't integrate CSRD in their local legislation? Are the companies still subject to CSRD or not?
That's a good question, but it's more for the Commission than for me. We have understood that many are getting equipped and ready to disclose also on a voluntary basis if the regulation will not be in place for their deadline. And we also understood that many are working, many countries are working to complete in time their transposition. Not all will be in time, nevertheless, and the Commission has started an infringement procedure, but I don't think I can give you any other indication at this stage.
Thank you, Chiara. And maybe a last question for you before we drop is about stakeholder engagement. What do you suggest for this? Are online surveys enough, and how would you advise company to engage the stakeholders?
Well, there is something that we tried really to explain. It's useless and it's misleading. Is to launch this massive campaign of collecting input via survey. Myself, I have been invited to participate with these online links, at least to 20 different materiality assessment. I'm really puzzled. What can I add? I don't know your company. I may know something about sustainability reporting, but I don't know your company. I'm not an affected stakeholder. The only, you should first of all make a selection and identify who are the stakeholders that are affected by your company. Then if you want to do that with an online survey or with meetings, it's more a practical aspect of how you want to involve. But they should be either the impacted stakeholders or anyway
experts very close to the topic.
Thank you very much. Chiara, I see that you need to go, so I'll let you go. I'll answer a last question about Greenly, and then we're done for this webinar. So the last question is about how Greenly extracts and consolidates data for reporting. So it's for the SRS1, we take the data from our platform or from your external environmental reports. And for the rest of the ESRS, we are indeed working through data upload or APIs. Thank you all for joining this webinar. I hope you found it interesting. Stay tuned and don't hesitate to contact me or anyone in the Greenly team if you want more information about Greenly or the EFRAG. As you see, they have this amazing Q&A platform where you can ask every question you want about the EFRAG. And they have these implementation guides that should answer the more frequently asked questions. Thank you so much, everyone, and see you soon. Goodbye.